All right, here we are on the eve of, on the day of what is probably what we can call a Fed pivot, because what the market is telling you, if you look, is that today there's a 94.2% chance that the Fed's actually not going to raise interest rates. And that, to me, when the Fed isn't raising interest rates, is a pivot, no matter how you look at it. Now, when I look at Bitcoin today, there are a few things that are keeping it down, because I think that if we weren't under attack by the SEC and we didn't get these attacks against Binance and Coinbase, and there's another thing that's happening today in Korea, the biggest lending company in Korea, which is almost the South Korean version of Celsius, has halted withdrawals. Now, we know what that means. When they halt withdrawals, that's the first sign of what the bankruptcy process, of the beginning of a bankruptcy process. And they're not a small operation. In fact, if you look at their website, it seems like they have about $1 billion worth of Bitcoin. They have about $205 million worth of ETH. And I don't know if this is real, but it says $8 billion worth of altcoins. That sounds like a lot of altcoins. But regardless of whether this is accurate or not accurate, this is something that we should be paying attention to. And I think that when the Koreans wake up in the morning, which is about 12 hours from now, about 12 hours from now, when the Koreans wake up, well, maybe the market's going to move when they realize that one of their biggest lending protocols has actually gone insolvent. We know what that feels like in the West. So yeah, a big show today. The eve of what they say is the pivot. Is it going to be a pivot? That's what we're going to talk about today. If it is a pivot, how the market's going to respond. Is Bitcoin going to get any kind of response? That's what today's about, guys. So let's do it. I'm not touching. I don't know how many times we're going to play that Phoenix today, but I hope you enjoyed it. All right, let's see who's present here today. By the way, I saw a lot of you were watching our Spanish stream yesterday, and in the chat, instead of saying present, they say in Spanish presente. So if you're here, say presente. Wayne, are you here? Presente. Freddie, are you here? James is here. Everybody's here. Nomad Dad, I see that you're here. Chaos is always here. Gabby the DJ always here. You don't have to say present if you are here on this big day, the day of the big Fed pivot. Now, Fred and I were having an argument earlier as to whether a pause is actually a pivot. I don't know. Let me know in the comments what you think. If the Fed pauses after raising rates so many times, is it a pivot or is it not a pivot? It's a pivot. If the Fed pauses after raising rates so many times, is it a pivot? It's a pivot. Everyone says it's a pivot. The only one who says it's not a pivot, two people say it's not a pivot. Fred and Scott Malka. Both of them say that if the Fed pauses, it's not a pivot. To me, it's a huge day today. I think that the Fed is going to do this big pivot that we think. 94.2% of people actually say the same thing as I say, that the Fed is going to not raise interest rates today for the first time. We're going to look at why they're not going to raise interest rates today, or probably not going to raise interest rates today. And I'm also going to show you why I think the market is actually wrong, because what the market's saying here is that we won't get an increase in interest rates today, but then in the next meeting, we're going to get an increase in interest rates, and then it's going to hold steady for 3 months, and then we're going to decline to the same rates as we were today, and we're going to finish the year at the same rates that we were on today. Now, I think that that's wrong. I think that we're not going to get an interest rate increase today. We're not going to get one next month. We're not going to get another one until the end of the year. But I do think that the Fed holds rates higher for longer. So, they say Jerome Powell's favorite terminology is rates may be higher for longer. That's what I think is going to happen today when we have the FOMC meeting tonight. Now, if you want to join us for the FOMC meeting, we probably won't be live on YouTube. We'll probably be live on Twitter, on the Twitter Spaces. So join us on Twitter Spaces. It's on Mario Norfol's account. We've been getting huge numbers there. I mean, I think we had 1.5 million people tune into our spaces yesterday. Just yesterday, 1.5 million people actually tuned into the spaces. So we'll be live when the FOMC happens. As I said to you guys, I am expecting this big Fed pivot, so to speak. When the Fed pivot happens, we've got to look at all the charts. We're going to look at the Bitcoin chart. We've got to look at the NASDAQ chart. We've got to look at another chart, which I think we need to look at here, which is the Dixie chart. So the chart of the Dixie is super important because you see it's already coming down. It's already at 102.86 in anticipation of the Fed not increasing interest rates anymore. So we're going to watch all these charts live tonight. And then we're going to talk about why Bitcoin isn't a beneficiary of this huge bull market that is actually happening. I showed you guys yesterday that every other risk asset in the world, the Japanese stock market, the NASDAQ, are all absolutely flying. But Bitcoin ain't doing it and ain't flying because of this regulatory attack. So that's what we're going to be talking about. So if you're new to the channel, welcome, welcome, welcome. If you are a regular, you know what to do. Smash the like button. Help us grow. Help us get this content out there. If you're joining us on the Spanish channel, you know what to do. How do you say like in Spanish? There must be a way to say it. Not a single Spaniard here. Tell me in the comments how people say like in Spanish. I mean, how can we not have one Spanish person here to tell us how to say like in Spanish? What are we actually? We are ashamed of ourselves. Gusto. Someone says, so how do I say, just tell me how do I say smash the like in Spanish? Gusto is like. So someone says sound problem. Is there a sound problem? No, there's no sound. One troll. Okay, one troll says there's a sound problem. Anyway, let's look at what the expectations are today. Everybody, including Fred, says that the Fed is going to pause today. The only one who says that they're not going to pause is Citibank. They're looking for a 25 basis point rate hike. I think they're wrong, and I'll show you in a few seconds why I think they're wrong. I think that when people ask you, is this a pivot? There's no doubt that it's a pivot. And the reason why I said there's no doubt that it is a pivot is look at this chart over here. It shows you how quickly and how aggressively the Fed raised rates. And what you'll see if you look at this chart is that we've never had rates being raised as aggressively as the Fed raised rates this time around. So when we go through a whole lot of meetings where the Fed raises rates at the fastest rates that they've ever raised rates, or as far as we can remember, when they pause raising those rates, then I think it's a pivot. And so I think today is the day of the big Fed pivot, which is why we called it, as you can see in the corner, the great Fed pivot. After this, as I said, the market's expecting one more interest rate hike. I think the market's wrong here. Let's see if time will tell. After that interest rate hike, 3 months of nothingness, and then back to where we are today, and that's how we'll finish the year. The big question is whether Fed pivots are a good thing or a bad thing. Because when we were debating whether we should make this thumbnail green or whether we should make it red, Fred said a Fed pivot is actually a negative thing. And he referenced this chart over here. And he said, look, the time that the Fed pivots and starts decreasing interest rates is usually when the markets start going down. So the Fed usually pivots. The Fed usually takes action when the economy is healthy. When the Fed thinks that the economy is unhealthy, then the Fed pivots and says, okay, we've got to drop interest rates very, very, very quickly. So I think Fred's half right and he's half wrong. Because I think if the Fed started to reduce rates, that would probably be because we were in some kind of crisis. But this time, they're not actually reducing rates. So it's like half a pivot. And what we do know is that after a Fed pause, markets usually run. So this is a chart that shows you what happens when the Fed pauses. This line over here is obviously when the Fed actually pauses. You can see what happens before, but what you can see is straight after a Fed pause, markets usually take that as a very good sign. It's usually like the foot on the accelerator by the Fed to say, okay, you've got the license to start moving. And you can see that markets usually move up, and they move up around 10 to 20%. Okay, now that would be amazing if markets moved up around 10 to 20%. Specifically, if you look at where the NASDAQ has been since January. We looked at this yesterday, and we saw that we have the NASDAQ up 40% or 38.74% since January. Now, what this is saying is that if this is correct, and if we perform like the 1, 2, 3, 4 other times that the Fed has paused, we could get somewhere between a 10 and 20% increase in the major markets, in the S&P 500. So I don't know how you can argue. Maybe you can argue that a pause is positive, and the Fed will only start decreasing when something actually breaks in the economy. So that means that Run's right and Fred's right, which means that we can actually go with a green thumbnail, like I said, right? That's pretty much, we can do that now. Okay, so that's where we are when it comes to the Fed. I also think that the reason why the Fed can now stop raising interest rates is because they've definitely got inflation under control. In fact, I think they may have a different problem soon, a problem of deflation when the economy starts slowing down too much, which is the opposite problem. That's what happens when you tighten too quickly. And that seems to me like what may be happening. And the reason why I say that is because if you look at PPI, so PPI came out just before the show, like literally 20 minutes before the show happened. PPI falls to 1.1%, well below the 1.5% expectations, which means that we now have the producer price index falling very, very, very fast for the 11th straight month in a row, okay? That's the producer price index. Yesterday, we had the CPI, which was the consumer price index, and that also dropped for the 11th month in a row. And not only did it drop, but it was the biggest drop percentage-wise that we've seen since the beginning of the drops. So you had the PPI drop from 4.9% to 4%. Sorry, the CPI dropped from 4.9% to 4%, which is the biggest drop in inflation since inflation actually started coming down. That's huge. What that means is that Jerome Powell has successfully put on the brakes, slowed down the economy to such an extent that that inflation is actually now starting to come down. We also haven't had inflation go down 11 consecutive times for 11 consecutive readings in a row since 1921. So this has been a real slowdown in the economy. And I know this is not popular opinion, but I think that what Jerome Powell has actually engineered here is he actually has so far engineered this soft landing that he speaks of. So, he kept saying there could be a soft landing. Well, if this is what it took to get inflation down, and he got the interest rates up, and of course he did increase the interest rates faster than ever before. Where is that chart? Faster than ever before. But that also brought inflation down, and I want to show you how quickly inflation came down. Inflation came down in the last 12 months from 9.1 to 4.1, which is quicker than inflation actually went up. So what he has done is he has managed to slow down inflation at a quicker rate than inflation actually came up. And what we also see is we see that inflation now is in a 26-month low. Now, important that you understand, we still have inflation. We are still, goods and services, prices of things are going up by 4%. It doesn't mean that prices are going down. It just means that they're going up slightly lower. And the Fed has a target to get this to 2%. They want prices to consistently increase to 2%. So I know it's unpopular opinion, but I actually think that what Powell has done is he has engineered this soft landing. Now, Stan Druckenmiller, who's one of the biggest investors in the world, one of the renowned billionaire investors in the world, he said that he doesn't believe that the Fed, he said, once inflation goes above 5%, it has never come back down without the Fed funds increasing, the Fed funds rate exceeding CPI. Now we are at a point where the Fed's fund rate is actually bigger than CPI. So I want to show you what he said when he said it, and then we can talk about
inflation gets above 5%. It's never come down unless Fed funds have gotten above the CPI. Well, since the CPI is 8, that would call for a Fed funds rate of above 8. Frankly, I don't think
he says there can't be a soft landing, and he says that the Fed fund rate has to go above inflation. Well, guess what? Now the Fed fund rate is above inflation. And I think, to be honest, if this is the worst that we've had, and this is it, and the stock markets are performing like the stock markets have performed, and the NASDAQ is at 14,000, which, by the way, is, let's see how much from the top. That means that the stock market is 11 up. That means that the stock market is 11% off certainly the NASDAQ is 11% below its all-time high. Then I think that that's pretty much a soft landing. And I think that the markets are telling you exactly the same thing. The markets are telling you that, look, we anticipated inflation to come down. We anticipated the Fed to start pausing or pivoting. And therefore, these markets have actually been on a massive bull run since January. As I said, the NASDAQ up 40%, since January. It's not only the NASDAQ, it's pretty much every single market around the world is at an all-time high or rushing towards an all-time high, which means that the market is seeing beyond. The market, remember, the markets look 6 months ahead. And so 6 months ago, they realized that the Fed was actually going to start pivoting. And that's exactly what happened. It's just like over here, they realized in November that in January, we were going to start talking about an inflation problem, which is what happened. And then the whole of last year, we dealt with this inflation problem, which took the markets down. And now they're saying, look, the inflation problem's finished. They have to start increasing liquidity. They have to start decreasing the interest rates. And therefore, the markets have been on an absolute tear. Now, this would have been really, really, really good for Bitcoin, because we know that Bitcoin and the NASDAQ were actually very, 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 very correlated. That's until the attacks on crypto and on Bitcoin actually took place. And you can see it pretty clearly in the charts. If you look at these two charts, you've got the NASDAQ and Bitcoin both starting to climb earlier this year. You can see, let's start it over here, both starting to climb. But then somewhere here, around April, when the attacks on crypto actually started, you can see Bitcoin started to come down while the NASDAQ continued on its rampage. Now, chances are we probably would have continued on this rampage if we had just kept our correlation to NASDAQ. And we would have kept our correlation to NASDAQ if the SEC and everyone else didn't actually go after Bitcoin. Now, I think there's a little clue here, and I'll tell you what I think the little clue here is. If you look at the nature of the attacks, you'll probably realize that the attacks are much more on crypto than they are on Bitcoin. And in fact, they probably can't really attack Bitcoin because Bitcoin is regulated as a commodity. It can't be regulated by the SEC. And right now, what the Biden administration is doing is they're using the SEC as this pawn to attack crypto. And they cannot regulate Bitcoin. Bitcoin is already regulated. And so what I think is happening here is that the Bitcoin market is scared because of the attacks on altcoins. And what I think we'll see here is we'll actually see Bitcoin start to decorrelate or to recorrelate with the NASDAQ, which it hasn't been doing. And when that happens, I think we could actually get a spike in Bitcoin. So we start tracking the NASDAQ a bit better. You can see that over here, and you can see that over here. So as soon as we get our correlation back, and I think that that's what's going to happen, we're going to get this correlation back. We're going to decorrelate from gold. We're going to start being more correlated to the markets. And as I said to you, I think the markets have been on an absolute tear. I also want you to be smarter than most people in the markets. And I'll tell you why I want you to be smarter than most people in the markets. Because while everyone thinks that the markets are just on a rampage, it's actually not that the markets are on a rampage. It's only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks that are up, and the rest of the market up. So if you look at the S&P, the S&P is up 13%. Of that 13%, what's dragging the S&P up is 1.4% of the drag up is being caused by all the stocks in the S&P 500, which is 490 stocks. And the other 9 stocks have dragged up the S&P by the balance of the 13%. So this one's dragged up by 2.4%. This is Microsoft has dragged up by 1.9. NVIDIA has dragged up by 1.8. Alphabet by 1.3. So it's not a broad market rally yet. It's a big, safe market rally yet. Now, you can almost say that this is the same as when Bitcoin rallies before the altcoins actually start to rally. So you've got the big Bitcoin rally, which is the safe haven rally, which is Apple, Microsoft, NVIDIA, Alphabet, Amazon, etc. And then once the market maximizes the returns on those and gets confidence in the bull market, and perhaps potentially we go into this kind of cycle over here where after a pause the market starts to run, then the rest of the NASDAQ actually starts running. And I think that that's what's going to happen in the traditional markets. The other thing that may get Bitcoin up is that Bitcoin has always been correlated to US dollar liquidity. And since the attacks happened, what you can see is we have decoupled from USD liquidity. Now, we always say Bitcoin is the ultimate responder to liquidity. And here you can see that's the chart of the US dollar liquidity, and that's the chart of Bitcoin coming down. And when did they decouple? Kind of like the middle of April, which is exactly when Bitcoin decoupled from the NASDAQ, which is exactly when the serious attacks started on crypto. And again, I say to you, watch out for these things, because I think that what's going to happen here is the market's going to start realizing these are attacks on crypto, not actually attacks on Bitcoin, and then we're going to get some kind of Bitcoin rally. I don't know if the alts are going to rally as hard for as long as the SEC keep attacking the altcoins, but I do think we're going to get some kind of Bitcoin run because of this pivot and because of the extra liquidity. So that's what I think. But I think the SEC are going to keep the attacks on altcoins going, and while they keep the attacks on altcoins going, well, then I don't think altcoins can have their moment or their day in the sun. I just don't think so. Let's talk about the attacks. So the first attack is the attack on Binance. We know about that. They went to court yesterday with the SEC. The SEC was looking to freeze Binance assets, specifically in the United States. That was what they went to court for. And, well, they went to court. The judge basically said, look, I'm not blocking the assets. I'm not freezing the assets. I want you guys to get into a room with another magistrate. So get this. He says, Jackson gave the parties until June 15th, 5 p.m. EST, to figure things out, and chose a magistrate judge, names the name of the judge, 𝗬𝗓𝗪, to help negotiations. And what they're saying is, look, I'm not going to freeze the assets, but I want you guys to put aside enough so that we are safe. So everybody's safe. It says, Binance indicated they're willing to agree to some form of asset freeze in the Binance US, as long as they're still able to take on ordinary course of business, which would include allowing customer withdrawals. Binance lawyers said the US will repatriate keys to the USA so long as they have the ability to do normal course of business. So that's what the judge is actually, the judge is saying. So I would say that you could say that's a defeat to the SEC, because the market was worrying about that we would freeze Binance assets. We're not freezing Binance assets. We're not freezing Binance assets here. They have to come to some kind of agreement, and they will come to an agreement. That's what usually happens. The good thing here is that we realize that the court system is not as tyrannical as the SEC. So it may be a sign of what's to come in the other SEC battles, where the SEC says, hold on a second. We want to freeze assets. We want to do this. We want to do that. And then they don't do it. Guys, I'm getting a terrible echo in my ear. I don't know if you guys are also hearing it, but I'm getting a terrible echo in my ear. Okay, so I'm getting an echo in my ear. I think it's James just whispering sweet nothingness into my ear. That's probably what it is. You'll notice also lots of FUD on Binance. Lots of FUD around this BNB, and is CZ dumping his BTC to support the BNB price? It's not happening. CZ's come out and he said, look, we've never sold BTC, BNB. We even still have a bag of FTT, just so you understand. So that's what they're saying. And also, we have been monitoring Binance withdrawals. No one's withdrawing money from Binance. I mean, in total, 3 billion has been withdrawn in the last 1 month, which is 3 billion, 5%. Call it 5% of 6% of Binance's assets that have actually been withdrawn in the last month. So keeping an eye on that. Also keeping an eye on the Hinman documents that came out yesterday, which were a nothing burger. But they did show that even the SEC were a little bit confused about what a security is and what guidance they could give. We spoke about that yesterday, but what Paul, who's the chief legal officer of Coinbase, says proof from the Hinman emails of what we've seen, that the securities laws are incomplete when it comes to digital assets, that securities laws aren't meant to rule over digital assets, and that many digital assets are not actually securities. And now this is becoming a massive narrative now in the United States, where they're saying that the laws just aren't enough. And yesterday, Coinbase went to court with the SEC, or got a reply from the SEC. Remember, they wanted the SEC to commit to giving rules. And the SEC is now asking for an extra 120 days to respond, which is like, it's ridiculous. It's like the SEC is like playing these games. That's basically what's happening here. SEC is just playing games, destroying the United States, destroying the US's competitive position. And that's how yesterday there was a hearing in Congress. And that's actually how they started it yesterday. We had 𝗏𝗏 representing crypto over there. You can listen.
Minnesota, the majority whip of the House, Mr. Emmer, is recognized for 5 minutes.
Thank you, Mr. Chairman.
I want to thank Chairman McHenry for holding this important hearing today, and I want to thank all the witnesses for your testimony. We're convening to discuss a remarkable piece of draft legislation on digital asset market structure. It's a product of joint committee collaboration, which here in Congress doesn't happen often, and is drafted thoughtfully and intelligently. I want to commend Chairman McHenry, Chairman Thompson of the Agriculture Committee, and both of their teams for all their hard work. Crypto will thrive with or without the United States. What we seek to do
Crypto will thrive with or without the United States. That's pretty much what his main message there was yesterday. And best we don't fall behind, because we're already starting to fall behind in like so many other places. We shouldn't be falling behind when it comes to crypto. So the fight in Washington continues. And they seem to be adamant that they want to kill crypto, and some people are trying to defend it. They're trying to kill crypto the same way that they've been killing the US dollar. And that is also what Janet Yellen said yesterday. She was at a hearing and she admitted, I mean, listen to this. She actually admitted this.
Sanctions on countries around the world, and taking that into consideration and be more thoughtful as we may be creating a paranoia around the world where people are looking for other currencies to do transactions.
It is true that when we impose sanctions, countries that are afraid they can be the subject of those sanctions are motivated to look for other tools other than the dollar to engage in transactions. So
but even
that's
our
something
friends,
we have to accept. It is much more difficult to find other tools to make payments, other currencies, when we work jointly with
but we even have our
partners.
friends like France also looking for other currencies and pushing it.
You know, France and some of our allies were not happy when we pulled out of 𝗕𝗓𝗄𝗃 and imposed sanctions. And but there, I would say there is virtually no meaningful workaround for most countries for using the dollar as a reserve currency.
Very well. And
So get what she's saying. She's saying, look, countries are unhappy with us because we've been using the US dollar as a weapon, but there's no real workaround for them. So they have to use the dollar because they have to use the dollar, that's bad thinking.
Earlier, you made some statements about it's being the most stable option with rule of law and liquidity and all
Yes.
that. But isn't it the fact that the use of the dollar has diminished and gone down against competing currencies over the years?
There's been some increase in holdings of other reserve assets, but that's something to be expected in a growing world economy where there is a desire to diversify. But
so we should expect less use of the dollar, is what you're saying. We should be anticipating.
We should expect over time gradually increased share of other assets in
Increased share of other assets means decreased use of the dollar. That's exactly what is actually happening. Look at that. That's the chart of dollar usage as a reserve currency, and that's exactly the chart. So they're realizing a lot of people are asking the right questions around de-dollarization. Listen to one more part of this a hearing yesterday.
Did a tabletop exercise, and in response to sanctions against a Chinese scenario where there will be an invasion of Taiwan, the scenario was that China, the second largest foreign creditor of U.S. Treasuries, would dump that $859 billion in Treasury securities. How are you working with our allies internationally and also the Federal Reserve to deal with a situation where China would dump that volume of Treasury securities overnight?
So we are not engaging in specific exercises to address such a risk, but the United States, the National Security Council, is certainly concerned on an ongoing basis.
Well, Madam Secretary, I would encourage Treasury to make preparations and be.
So that's it. So they're talking about the de-dollarization being pretty real. And I don't know if you remember, this was the president of Kenya. He was the one who started this last time, and he came on again and he went on a big rant in Africa. But I don't think it means anything. By the way, for those of you who don't live in Africa, this is how we do politics relative to how the US does it. Just for those of you who don't know how politics works.
Traders from Djibouti selling to Kenya, or traders from Kenya selling to Djibouti, have to look for US dollars. How is US dollars part of the trade between Djibouti and Kenya? Why? And we are saying that today, Afri-Exim Bank have given us a mechanism where traders in our continent can trade in their goods and services, and the Africa-Exim Bank will settle payments in local currency.
Okay, so you see he's on this whole rampage of de-dollarization. Now look, I don't think it's going to happen anytime soon, but it's good to see that the signs are all there and we're moving in the right direction. Okay, now, we're going to move to this next story, which actually might not be such a big story after all. Or is it a big story? I don't know if it's a big story or not. So, before the show, there was a story that Happy Delio, which is a big Korean lender, has halted withdrawals. And it says has 41,000 Bitcoin. Is that right? Does it have 41,000 Bitcoin? Hold on, because I'm getting news coming in now that maybe that's wrong. So let's just check the news that's coming in wrong. Okay, so it looks like, okay, so they do have 41,740 Bitcoin. This is like the Celsius of South Korea. And I remember South Korea is a very, very, very big market when it comes to Bitcoin and crypto. In fact, one of the biggest Asian markets with the most adoption. And it looks like they're having like a Celsius moment. Now, I don't know exactly the facts here because this literally broke while I was putting on my headphones to get into the show here. But what it seems like is that there is these two companies, Happy Delio and Haru, which is the lending and yield services in Korea. But apparently they have 41,740 Bitcoin. That must be right because they quote that in Bitcoin. They also quote their altcoins at 8 billion, but the 8 billion is not right. You know why? Because that's a translation of the website for Korean won, which means like it's got very, very, very few. That makes much more sense. So $6 million worth of altcoins and $1 billion worth of Bitcoin. Doesn't make sense. Okay, so I think the long story short is these guys seem to have a withdrawal problem. Someone just coughed in my ear. Okay, so they seem to have a withdrawal problem, and they say that the withdrawal problem is because one of their service providers has fraudulently provided management reports containing false information, thereby deceiving the company and the users. It sounds like this is maybe their custodian or something like that. So keep an eye on the story. I'm not sure how big this lender is. If they do have 41,740 Bitcoin, that's $1 billion. That's big. That's not as big as Celsius, but that is quite a big number. So we've got to keep our eyes open for that. It hasn't affected the price, but I think we should keep our eyes open for it. Cool. All right, before we go, let's quickly talk about how the pros are actually trading this FOMC pivot, because as I said, it's a big day today. And whenever I want to know what the pros are doing, I obviously go and look for the options traders, right? So let's get an options trader from Deribit on the line. We got Pierino, right? Is Pierino with us? Okay, so there we go. Pierino, how are you, sir?
Hello. Hi. Yeah, fine. Thank you very much. Great to be here.
Very excited about today. I think today is a pivot when it comes to FOMC language. What do you think? Is a pause a pivot or is a pause not a pivot?
I'm not sure, Ren. It's quite interesting to hear your story about prices which have to come up. I would agree with Bitcoin with you, but we have a very special situation in Ethereum options nowadays, and that is that we have a large concentration of gamma at all the dealers and the market makers.
So what do you mean? What do you mean when you say a large concentration of gamma with the market makers?
I will explain you. So a lot of market makers, they have optionality in their portfolio. Obviously, we've seen in the past months Volatility sinking to all-time lows. They have been gathering more and more optionality. And I will briefly explain you the principle of gamma. So let's say Ethereum is now trading around 1745, and I'm long 1 million options at 1750, which expired tomorrow. So what will I do when I'm a professional trader? When the market will go to 1755, I will take profit. I sell 1 million Ethereum futures, and then I have a flat book again. If then the market would drop below 1750, I will buy them back.
Yes.
And if it goes above 1750, I will start selling again. So that is what we as option traders call gamma trading. Obviously, the effect of this optionality is much bigger in short-term options as compared to long-term options. But the positions in especially Ethereum are huge. So firstly, I think that the FOMC, that not much will happen. It might entice.
You mean not much will happen to the price? Or I mean, obviously at the FOMC, I think the pivot's going to happen, but you're saying not much is going to happen to the price?
In Ethereum. And when I look at the distribution of optionality in Bitcoin, that's a whole different story. So in Bitcoin, it's not that there's a large distribution of optionality with the traders or the market makers, but it's just in Ethereum. So to be honest, I wouldn't be surprised if it starts running that BTC will run much faster than Ethereum these days. And these Ethereum options, they are distributed a long time, but let's say for the coming 2 weeks, personally, I don't expect much moves in Ethereum universe.
And so you're expecting a move in Bitcoin and not in Ethereum?
Well, if there will be a move, I firstly would expect it in Bitcoin. And if there is a huge move in Bitcoin, then Ethereum might follow. But if not much is coming out of this event, I really think that Ethereum will be stuck around these levels for the coming weeks.
So what's the way to trade this? Like, what's the way? If I want to trade this now, I've got an account in Deribit and I'm ready to trade options. What do you reckon is a good trade here?
It depends on what you believe. What I have seen as well is that when dealers got more and more optionality in Ethereum, that they try to offload optionality in BTC. That's also what you can see in our DVOL index, is that actually BTC and Ethereum are now at the same levels, while usually we expect Ethereum volatility to be higher than Bitcoin volatility. So I cannot give you straight advice, but I can only say if I would have been bullish on a move in this market, I wouldn't touch the Ethereum options, but I would enter the position in the Bitcoin.
I agree.
Exactly.
I agree. I think we're in Bitcoin season, my friend. I think right now, for a little bit, I think we're definitely in Bitcoin season. All right, let's see what happens. Pierino, thanks very much, my friend. Thanks for coming on the show, letting us know what the pros are doing. Guys, that's what the pros are doing. If you want to trade like a pro, you trade like a pro. You go and sign up with Deribit, get an account, KYC, and ready to rock and roll. Josh is asking me to send you all to Banter Bubbles and tell you to all to download our iOS app and our Google app. So go to Bubbles. You know we love our Bubbles app. There's communities in every single bubble. Let me just show you how amazing the bubbles are. You've seen them all. You can see what's moving. We can actually see what's moving now. Sui down, Hex, Pulse, and Pulse X. Not great, eh? Just generally not great. Ferdy, how does that make you feel? Hex is going to zero.
Pretty close to zero.
And Pulse?
Close to zero as well. No, I've learned my sins after. I've repented.
He's repented. Ferdy says he's repented. Okay, download the app. It's also available on the Apple Store and the Google Store. And then lastly, if you want $20, is this true? Or is this a scam? From today until the 18th of June, all users who sign up to ByBit and deposit $100 will get a $20 cash credit by Monday, the 19th of June. I mean, you want $20? Just go to ByBit, open an account, put in $100, take 120, then withdraw the 120. Simple. It's just your easiest way to make 20% today on $100. If you want to make $100, there's a link below. Sign up with the link below. Okay, listen. So here's the story for today. We are now going to Twitter Spaces. We start in 10 minutes. We will be there. It's on Mario's Twitter Spaces. I'll retweet it. We will be there for the next 8 hours. Okay, so we're going to be on Twitter Spaces from now for the next 8 hours. We've got an action-packed show. We're going to broadcast the FOMC live. So I'll see you guys again in about 12 minutes in the bubbles. Yesterday, 1.5 million people tuned in. Let's see if we can get it bigger today. See you guys then. Until then, trade well, my friends.